Hello, I'm Robin Gibson, and this is the Harvard House Money Morsel. Welcome back. Thank you for joining us again. Don't forget to like and subscribe and click the bell so you get a notification when we're releasing a new video. I'm sitting today with Willie. Hello, Willie.
Morning, there's a bell. It's your birthday. Happy birthday.
Thank you very much. Yeah. Fast approaching 60 according to my son, although I'm only turning 56 today. So yeah, I suppose the rounding number is getting close. Yeah. So Willie, I mean, one of the things that's early on in the year when we had the whole budget debacle, the whole issue about raising VAT was to get extra money because we don't have enough money. But we're at that point where government releases what they actually have collected year to date. And there's been some surprises there, haven't they?
Yeah, no, Ron, definitely. So obviously the budget for some numbers, on personal income, on VAT, on corporate, and all of those type of things. There's obviously lots of subdivisions on the income line. But for me personally, for us as Harvard House personally, a big standout is actually on VAT specifically. So VAT, I think the budget increase, obviously the growth in VAT for the year was around about 5 or 6% increase on that. Remember, we're working with a low GDP scenario. Yeah. So now on a year-to-date basis, we've increased relative to that by almost 11%. So that's a huge difference in income specifically. So we're well ahead. Delving a little bit into the VAT, obviously, there's lots of metrics around VAT. The principle is, everybody pays it. So that's a good indication that there's a system in the economy that's working. We often speak about the informal sector, the formal sector. So there's trade. There's volume of trade happening. So that's why the VAT's higher. But also if we break it down and you look at the sort of the VAT rebate. So what I read into that is if you build stock, if you buy inventory and so on, before you sell, you're obviously going to pay you're going to pay VAT, you get the rebate principle, and then you wait to sell the goods. Now the first thing is I'm not going to build up my inventory, sorry for my English, if I'm thinking that the economy is not going anywhere. So that's a good indication. And then on the import side, we're collecting less VAT because we're not increasing our imports, and it's predominantly oil, because simply put, oil is at $60 a barrel, so we're not paying more for it. So that's the thing. Another standout, Robin, is actually dividend. So there's a withholding tax on dividends, and then that obviously gets paid by the corporates to the receiver. I can't remember the percentage, but I think it's well over 20% increase on that. Again, it's an indication that companies are doing well because they've distributed the free cash flow in the form of a dividend to us. That's obviously risen year on year. Our sort of story, if that can increase faster than inflation, we make money, they make more money. So yes, government finances is not the swear word we had when we had the budget surplus. So there's lots of positives to be read into that.
So, you touched on the informal economy there. I've always argued, because we always say that the informal economy is so difficult to measure, I've always felt that VAT was probably a really, really good way to measure it, because most of the informal traders will not be claiming a rebate, but they will be paying VAT.
They will be paying.
And so, you can pick up, it really shows the extra numbers in there, and then it really came through, didn't it?
Because the spaza shop, he goes to a big warehouse type of seller like a Macro and all of these places, and the VAT's collected there. But he's not in a position, he's under the threshold of trading for the year, so he's not even registered for that, but he has paid.
100%. Willie, the other thing, other chart we looked at interestingly this week was kind of the terms of trade, and you showed a very interesting chart which showed our exports as measured by sale of commodities, and those are our major exports. versus the chart of the oil price in rand, and they really it is a bit of a crocodile happening, you know, which is why the rand is trading 17.10.
Yeah, Robin, we still have a commodity or a resource-based economy. We're not going to get away from it. You know, we've got the mining industry per se. So our exports, you know, if we look at all the mining companies, and let's stay to gold just from a numbers perspective. So they mine at about $2,200 per ounce cost.
Yes.
Now, the income from that by selling it, we're now talking about 4,000.
Yeah.
So if we just step back a little bit, most of the sales that has happened year to date type of thing from these companies has happened around $3,000 per ounce. So that's a margin increase for them as well. But obviously, from an income perspective to South Africa, that's the export number that came in.
Yes.
And we've referred to the oil being stable.
Yes.
So your terms of trade, so effectively, call it your cash flow gap, is opening like that. And where does it manifest itself? It's in the rand. So yesterday we were almost at 17 to the dollar. We're way below 23 to the pound. So that's another positive feeding into the economy, into the psychology of the South African consumer, the South African businessman. We're not sitting and thinking, we've got a dead trap and the rand's at 19 or 20 relative to the dollar, despite the fact that the economy is still sort of muddling along. But there's glimmers of hope, or more than glimmers, there's actually green shoots.
Yes, sure, absolutely. And I mean, one of the things, and yet if you read your newspapers, you know, we're talking about a crisis in our policing. You know, the major thing is collapse of municipalities.
Exactly.
And I think we've always said, and we'll wrap up on this point, but, you know, the newspaper, you can't wait until the newspaper shows to actually realize that there's something happening, because the market discounts future, not present. And so that's being discounted hugely, isn't it?
The market is on an all-time high. The market is consistently reaching new highs. Yes, it's resource-based, because if we take what is driving the market, exactly the point we made. But South Africa in itself, the SA Inc. shares, still offer impressive value, you know, relative to history and the prospects of what's coming. So,
good time to
stay vigilant and stay invested.
100%. Thank you, Willie. Thanks for giving us that insight. Thank you for joining us. Don't forget to like and subscribe, and we'll catch you next time. Bye-bye.